interrupted for the first. The alarm triggered. It's already 8 o'clock, and nothing. Where was that? So discuss briefly the theory of the double entry system. So the double entry system is every business transaction affects two different accounts, and so every transaction you I don't know, explain so what are the double entry system then? Let's see. Double entry system, double entry system. So increases of one may lead to a decrease in another, and a decrease in another may increase another. So yeah, basically the double entry system is a system in accounting where one account affects another. A business transaction affects one or affects two or more accounts. So yeah, that is it. Like there should at least be two entries when there's a business transaction. Like when you buy supplies, you lose cash, so a decrease in cash, and then an increase in supplies. Or when you perform services, you receive cash, and then you also receive income. So every business transaction has two. So that's why, yeah, that's the double entry system. You enter two effects and you account two things during every transaction. So state the rules of debit and credit. Gosh, what are the rules of debit and credit? I don't know. What are the rules of debit and credit? Maybe mentioning. Where was the mention? Are there rules? What are the rules of debit and credit? The account is debited when an amount is entered on the left side of the amount, and are credited when an amount is entered on the right side. So there's this the account, and then so angle sa camera ha. And on this side, this side of yours, it should be recorded as debit, and then in here's this side is credit. So maybe I'll turn opposite once uploaded, but yeah, the left side is the debit side and the right side is the credit side. So the left side is the assets. So every accounts that belong on the asset side should be recorded, or their normal balances are on the left side. So yeah, and liabilities and equity are on the right side. So yeah, so if you debit an asset, then an asset increases, but if you credit an asset decreases. It will be a decrease in asset, and if you credit a liability or equity, then that would be an increase in the liability and equity account, and a debit in the liability and the equity account would be a decrease because their normal balance is credit, not debit. So yeah. And for the income and expense, so expenses are on the left side of the account, and income is on the credit side, so it's on the right side. So debits, yeah. You debit an expense, then the expense will increase, but if you credit an expense, the expense will decrease. And for income, it's vice versa. If you credit an income, income increases, and if you debit an income, the income decreases. So at least that's how I understood it. So, what criteria must an asset meet to be classified as current? For an asset to be classified as current, um, the asset should be held in the normal course. Dapat I should explain it in something that I understand. So, it is current when the asset is held for sale on the sale or use in the normal cycle of accounting in a single period, or yeah. So or it is held for sale in less than 12 months. So it is current when the asset doesn't last that long in the business, I guess. Like those that you sell, assets that you sell, they don't last long in the business. They come and go. You see the point? That's the point. For mine. I'm talking to myself. So yeah, those are current assets. These are assets that you use for you usually use for sale and for, I don't know, expenses as well, like supplies. These supplies are assets that you usually consume on a regular basis. It doesn't last for more than a year, so yeah, that's the current assets. So current assets are so assets that are um how do I explain? Current assets not disappear, from disappear, but are used up usually in the current accounting period, which is usually 12 months, less than, no, usually less than a year, or a year around that time. So yeah, those are current assets. And the opposite, to understand current assets more, I guess you just compare it to the non-current assets, which are the assets that don't usually last for a last longer than a year, which are your property, your establishment. So yeah, those your land. Those don't usually disappear within a year. So yeah, those are. And so, where was I? Just the question was, what criteria must an asset meet to be classified as current? I explained what is current asset, not. So I guess the criteria is that it should be held. It should be sold, or so it should be sold or with the purpose of less than a year, or less than 12 months, or sold or consumed within less than a year. Yep. So explain the concept of prepaid expenses. So prepaid expenses are expenses that you paid for in advance but haven't consumed it yet. Like when you pay for rent at the beginning of the month, so you haven't fully consumed the whole rent in a single days, but you have paid for it in advance for the following days of an entire month. So that's why it's a prepaid expense. So you paid for 30 days already, and you haven't consumed the whole 30 days. So yeah, that's a prepaid expense. Uh, like you pay for prepaid load, you pay for, yeah, that's the best way to explain it, I guess. Load, you paid for 100 peso worth of load. So that's a prepaid expense because you haven't fully consumed the load as the moment you bought it. So you consume it until it, you consumed it fully. So yeah. So give the nature of the accumulated depreciation account. So non-current assets usually degrade over time. They don't, nothing lasts forever. I don't know, but yeah, um, usually kind of assets degrade or lose their non-current assets lose their touch over time, and so accumulated depreciation is a way to account for that degradation of the non-current asset, like building, or yes, buildings degrade over time. No, so yeah, so the accumulated depreciation account is the accumulated expense, or the total of the expenses that um, the total of the expense for the what do you call this particular non-current asset. Ah, wait. So yeah, the accumulated the accumulated depreciation is so engineering accumulated depreciation. Should I explain it? But the accumulated depreciation is the total value of the expense, so the total expense over time, the accumulation of the expense over time that is decreased from the asset, the non-current asset itself, to obtain a different value of the non-current asset. So it's book value. So let's say your building is worth 100,000, and then every year, nasa way. So where was I? So for example, there's a building, and the building costs $100,000. It's 100,000, and then every year your building loses value, so it's not gonna be worth 100,000 all the time. It's obviously gonna degrade because of rain, earthquakes, you know natural phenomena stuff. So yeah, that's why there's a way to account for that, which is the the depreciation. And so basically there's an equation, and I'm not sure, but yeah, accumulated depreciation is the sum of the depreciation over the years. So let's say either the building loses, there's a depreciation of 5,000 every year, and in 5 years it will be, the accumulated depreciation would be 25,000. 5 years, 5,000 worth of depreciation. So yeah, 25,000. So yeah, that's it. And so the book value of the building wouldn't be 100,000 if you decide to sell it. It would be either the fair value or the book value. I don't know. I'm not what I'm talking about. But yeah, that's it. That's how I understood it. And so next is mm, what's about? So what is an intangible asset? Give at least 3 examples. So an intangible asset is a non-current asset that um, it's not abstract in nature, but these are assets that are intangible, which cannot be, they don't have a physical form, but they do have economic benefits for the businesses and therefore should be accounted. An example would be copyrights. That's an intangible asset. So copyrights don't have, substance. There should be a legal one, but basically it's an abstract. And yeah, another example would be patents for the business, and goodwill. I don't know what goodwill is, but yeah, copyrights and patents and goodwill are example of intangible assets. And then next would be liability accounts are classified as either current or non-current. What are the criteria used? So liability accounts are classified as either current or non-current. What are the criteria used? So wait, the question is liability are classified as either current or non-current. What are the criteria? So the criteria used to classify current and non-current liabilities is the time that they should be settled. So if the liability is expected to be settled less than 12 months, or in the usual accounting cycle, which is 1 year. I don't know what I'm speaking, but it's less than 12 months or 1 year. It can be classified as a current liability. However, if the liability is a long-term one that is expected to be settled in more than a year, 3 years, then it's non-current. And income and expenses comprise income statement. Give at least 2 examples for income and 5 for expenses. So income and expenses comprise the income statement. That's true. That's why it's income statement. Give at least 2 examples for income and 5 for expenses. So 2 examples for income is revenue and gains. So revenue is, the income that you get from your business, while gains are other income for your business, but doesn't come from the normal business activity. Like, you sold your tables, so your business isn't selling tables, but regardless you earned an income. So yeah, those are gains. And revenues are the sales, the normal way. And expenses, 5 expenses. So the usual expenses are your utilities expense, the electricity, the water bills, and etc. The salaries expense, which is paid for the payment salaries for the employees. Supplies expense, so your supply consumption. What else? Oh, what are the expenses? Supplies expense, salaries expense, utilities expense. I'm a cheat, I'm a cheat, I'm a cheat. So, yeah, depreciation expense, but let's not talk about depreciation expense because I don't understand that. Um, cost of sales, so the expense for your products that you want to sell, like how much do the products that you sell costs, so that's an expense. And then the rent expense, so those are the usual expenses. So the rent expense rent expense, the utilities expense, salaries expense, salaries expense. Kalimutan ko. Gosh. Yeah, kalimutan. And then cost of sales. And then supplies expense. So yeah, that's it. And cite a transaction that will decrease an asset and decrease a liability. So a transaction that will decrease your asset and decrease your liability is when you pay a debt. So when you pay a liability or a debt, so you pay cash, right? So you pay cash, so you lose cash. Then you lose cash, you lose an asset. And then after you paid for the liability or debt, then obviously the liability would decrease as well because you've paid a debt. So your liability has decreased, nabawasan yung utang, and your cash has decreased. So it's a decrease in asset and a decrease in liability. So next is a transaction was recorded increasing a liability and decreasing another liability. What transaction may have occurred? So increasing a liability and decreasing another liability. What happened indeed? So what are transactions that increase a liability and decrease another liability? And so maybe I don't know. Let's see. Liability. What are examples of decrease in liability? So gosh, there's no example. So one increase liability and one decrease of another liability. refinancing, like, so you paid. Hmm. What increases a liability and decreases another liability? Saan maka-increase na? So you pay. So mag-settle ka og liability by obtaining another liability. So let's see some as a liability. Mm. Unearned revenues day. So I guess an example of an increase in liability and decrease in another liability is doing service on credit. No, that's not a liability income na. So when you do service on account, okay, so when someone pays you in advance, I guess. So when someone pays you in advance, now you earn cash money. There's an increase in cash, not liability. Um, what increases in another liability? Mm, I don't know. Unsa nga maka-increase yung liability, maka-decrease yung lain nga liability? Mm, so, so ni-increase yung liability. The only thing that I can say is maybe what happened what happened is, so one, the owner already has a debt, but he can't pay the debt because he doesn't have any money. So he buys another, he asks money from someone else, and he used that money to pay his debt. So his debt increased, but his debt increased in another one. I don't know. So next, how does the use of cash to acquire another asset? How does the use of cash to acquire another asset affect the accounting equation? How about cash to settle a liability? How does the use of cash to acquire another asset affect the accounting equation? So when you use cash to acquire another asset, so it would be a decrease in asset, however, it would be an increase in asset. as well because so the what did you sabihin niya basi you use the liability for another liability. So yeah, so the use of so for example you use cash to buy equipment. So the cash amount simply transfer it to the equipment. So yeah, the use of cash, that is the effect of the accounting equation. So you lose an asset, however, you have an increase in asset as well, but not in cash, in equipment account. And how about cash to settle a liability? So it would be a decrease in cash and a decrease in liability as well. So how does the use of cash to acquire another asset affect the accounting equation? How about cash to settle a liability? How does the use of cash to acquire another asset affect the accounting equation? How does the use of cash to acquire another asset affect the accounting equation? How does the use of cash to acquire another asset affect it? One more guess again. Illustrate the distinction between revenues and receipts. I don't know the distinction. I read it here, but I don't understand what I read. So, basically, cash receipts are cash receipts are I don't know. It's difficult to understand here because of the yeah. So cash receipts are recorded as sales revenue. Wow. No. So the distinction between revenues and cash receipts. And so I guess cash receipts are recorded when sales are made, and then revenue is recorded when sales are I don't know the distinction. So I should probably read another the internet later. But yeah, the distinction between revenues and receipts. What would it be? So the transaction is cash sales made this year. So the amount is so cash sales made this year. So siya cash nga sales. So received 200,000. Na siya cash receipt. And then there's also a sales revenue of 200,000 because of the cash sales made. However, credit sales made last year there was transaction is there were credit sales made last year which is 300,000, but then the cash received from this year is 0. So there was a cash receipt of 300,000, but there were no sales revenue this year. because there were no cash received. So there is no revenue if cash isn't received. Another example is credit sales made this year and then cash received this year. So when you make a credit sale, then there's a cash receipt. However, you receive cash later, so the sales revenue is received as well. So, yeah. Credit sales made this year, so 0, but cash to be received next year is reported in the sales revenue. So, yep, it's difficult to understand. Credit sales made this year is 0 and cash to be received next year. But maybe I'll learn it in the future. And so, yep, that's the discussion questions. May have took an hour to finish, but yep, that's it. And so, and so that's it for one chapter a day.